End of the Ruble mini rally by www.forexconspiracyreport.com. Much has been made of the recent recovery of the Russian ruble from the 70 to the dollar range down to 50 to the dollar. Now it appears, however, that we are seeing the end of the ruble mini rally. The Moscow Times reports that the ruble extends losses after the central bank raised repo rates. The Russian ruble fell on Tuesday, extending losses from Monday when the central bank said it would raise the rates at which it lends foreign currency to banks. At 11:35 GMT, the ruble was 1.3% weaker against the dollar at 54.02 and had lost 0.8% to 57.69 versus the euro. Lower oil prices also contributed to the ruble's weakness, with international benchmark Brent down 1% to $62.8 per barrel. By raising its forex repo rates, the central bank has given the market a clear message that it does not want the ruble to extend its rally seen in the first half of the month. The central bank has raised its forex repo rates 3 times in the last month, toughening the terms of a facility that was introduced late last year, when the ruble was plunging and forex was in scarce supply. The end of the ruble mini rally appears to be intentional, as the central bank decides to back support. Now, will the ruble stabilize or begin to fall again? Long-term sanctions. 2 factors drove the ruble down during the last year. One was the fall in the price of oil, and the other was that the USA and European Union levied sanctions against Russia as punishment for its annexation of Crimea and meddling in the eastern part of Ukraine. The sanctions are not likely to be removed so long as Russia keeps Crimea, and according to the New York Times, Russian Premier Medvedev says that gaining Crimea was worth the sanctions. Prime Minister Dmitry A. Medvedev said on Tuesday that sanctions imposed on Russia over its annexation of the Crimean Peninsula had done meaningful harm to the economy, but that it was a price worth paying. In an annual statement to Parliament, Mr. Medvedev estimated that Russia's economy had lost $26.8 billion because of low oil prices and sanctions introduced by the European Union and the United States last year. In his speech, Mr. Medvedev said that Russia's economy had shrunk by 2% in the first quarter of 2015. Many see Russia in a mode of retrenchment after having secured military assets in Crimea and industrial assets in Ukraine. It is unlikely that Russia will give back its gains under current leadership. The end of the ruble mini rally is consistent with Russia holding its ground but not expecting for things to return to normal anytime soon. The high cost of borrowing money to trade foreign currencies. Bloomberg Business also reports on the end of the ruble mini rally as Russia's central bank raised interest rates for borrowing in order to trade foreign currencies. The ruble lost 2.2% to 53.016 per dollar by 5:55 p.m. in Moscow as the Bank of Russia raised the rates it charges lenders to borrow dollars at foreign currency repurchase auctions for the 3rd time since March 30, damping the appeal of the world's best carry trade in 2015. Russian government 5-year bonds fell, lifting the yield to a 1-week high. The measure underscores central bank governor Elvira Nabiullina's growing concern over the ruble's strength. While the currency's 15% gain this year shows investor appetite for Russian assets is returning, it also hurts state revenue as the rally reduces the ruble-denominated income from exports priced in dollars and euros. There are always winners and losers when currency values shift. The fact that oil is priced in dollars makes it attractive to bring profits back to a weak ruble. As the ruble raises, this benefit is diminished. Those wealthy Russians who have been repatriating money back to Mother Russia in order to buy real estate do not want the ruble to recover too much. For more insights and useful information about trading forex, visit www.forexconspiracyreport.com.